Welcome back to your markets news now. Most Asian stocks sank today as a devastating earthquake in Taiwan dented risk appetite, while uncertainty over the path of U.S. interest rates also spurred extended profit taking in the region. In addition to concerns over Taiwan, sentiment towards broader Asian markets was also hit by growing uncertainty over just when the Federal Reserve will begin cutting interest rates, especially ahead of the key non-farm payroll data that's due out this Friday. Markets in Asia read across the board. Hong Kong's Hang Seng has fallen 1.3%. China's Shanghai index declined by 0.2%, while Japan's Nikkei was 0.9% weaker at the close of trade. Over in the United States, stocks fell on Tuesday as investors weighed the chances that the Reserve Bank could delay cutting interest rates. Shares in Tesla also dropped after the electric car maker posted fewer quarterly deliveries for the first time in nearly 4 years. Tesla was among the biggest drags on the S&P 500 and the Nasdaq. The S&P 500 lost 0.72%, the Nasdaq Composite lost 0.95%, and the Dow Jones Industrial fell the average 1%. Over here at home, the JSE is mixed at this hour. The all-share index is off 0.6% to 73,963. The industrial 25 index is 0.1% weaker. Financials are down by 1%, and the top 10 resources index is 1.5% firmer, and the precious metals and mining index have gained 0.5%. Taking a quick look at commodities, gold is trading at $2,272 an ounce. Platinum at $934 an ounce, and Brent crude oil is at $89.33 per barrel. The rand is at 18.80 to the dollar, 23.64 to the pound, and 20 rands 25 to the euro. Let's go back to our market commentator. We're trying to get hold of Patrick Mathidi earlier on, and the gremlins just got in the way, but I believe he's on the line to speak to us now. Patrick Mathidi is the head of equities at Aluwani Capital, and he's our market commentator for today. Once again, Patrick, welcome to On Point. And let's talk about the gold and how it continues to hit record highs and the factors that are driving that.
Yeah, good afternoon, and thanks for having me. Indeed, we are seeing the gold price continue to trade at all-time high levels, currently sitting at about $2,210 per ounce. And a few factors are actually supporting that. One is the overall sentiment around global interest rates. So we are seeing inflation remain fairly stubborn across major economies, including ourselves. And we all know that gold is seen as a store of value. So in a high inflation environment, people tend to want to preserve the buying power of their money by putting into gold. So we're seeing gold demand on the rise on the back of that. The second factor is the geopolitical tension that continue to flare up, especially in the Middle East, but also in other parts of the world, especially the ongoing Russia-Ukraine conflict. That has the ability to destabilize, supply infrastructure of oil. And we all know that oil goes into major economies from a transportation cost point of view. So the oil prices also has been high as a reflection of that geopolitical tension, which then obviously feeds into inflation and therefore into the whole play in terms of gold being the preserved safe haven from an inflation edge point of view.
Patrick, let's talk about the vehicle sales figures released by NAMSA. It does tell us that the constrained business environment amplified by weak consumer demand and the recent Easter holidays have impacted on new vehicle markets performance in March 2024. Just generally, people surely are facing enough economic troubles and surely do not have the appetite to be buying particularly new vehicle sales. How do you see it?
Yeah, I think that theme has been ongoing for the last while. So despite, the consumer being under quite a bit of strain financially, the high cost of debt in the form of interest rates, there has been some hope that indeed, vehicle sales numbers would actually stabilize and tick up But unfortunately, for the month of March, we saw those down about 12% from the same period last year. And some of the factors you mentioned actually playing into the decline, including March being a very short month, from a business point of view, where we had, 2 long weekends, which did impact sales. But nevertheless, the underlying demand continues to be very constrained.
Yeah.
We are seeing consumers buying down away from the high-priced luxury cars into more entry level. But overall, the consumer sentiment is still not conducive to higher sales vehicles. We need interest rates to come down to make affordability easier for the consumer.
Yeah. Another key data that came out yesterday was the ABSA PMI that measures manufacturing activity. It also declined in March. No surprises there too, given the state or the operating environment that manufacturers are under. I was just seeing now that Eskom has just released that it is sustaining a no load shedding until further notice. And one would have hoped that this is the kind of message that one gets for the whole month for manufacturers, particularly to be able to see some gains and headway in their businesses.
Yeah, I think unfortunately, as soon as we get one, bright spot, another one comes through to undermine that. So if you look at the last couple of weeks or so, the water issues have unfortunately come back as another Eskom, from a confidence and banking point of view. So we are seeing quite a lot of, negative sentiment with regards to infrastructure, and now obviously water being one of those. But if you look at the PMI survey, I think the one bright area is when the respondent will ask their views or how they feel about the next 6 months. That number was actually up quite nicely, which means that there is confidence in the system. We just need maybe to get over the elections and achieve things. But certainly, from a manufacturing point of view, I think confidence 6 months from now hopefully comes through as being positive.
Yeah. Northwest Policy Index, it also went into territory. We spoke about this off camera, you and I, when you looked at the fact that this is an election year, and this index just tells us the fact that it went into negatory tells us that investors and markets are jittery. Could they be thinking coalitions perhaps? Can you tell us more about this index?
Yes, so the index, they ask business people how they're feeling, their sentiment around the politics and the policies of the country, more specifically policy certainty as we go through elections. And I think the reason why it has come out negative is that over the last few weeks and months, we have seen a few polls coming in painting a very bleak picture in terms of the election outcome, where we may then need to have more than one coalition partner for the current ruling party. And clearly that state of play, becomes a lot more disruptive, especially from a policy continuity point of view, where you have different parties who perhaps may have different agendas, trying to, let's say, govern the country both at a provincial and at a national level. So to the extent that we see an outcome from an elections point of view which points to a multi-party coalition, I think that could then pose a negative sentiment, at least from business people point of view, where policy implementation may be derailed and stalled, as we've seen in other regions where we have had coalitions, government in place.
Yeah. Patrick Mathidi, thank you so much. Patrick is the head of equities at Aluwani Capital. He has been our market commentator for today, giving us his views on a range of issues.